Sweet, why are you telling me that you
Hello, good morning, everyone. You're welcome to this training this morning. I want to please, can you all hear my voice clearly and see the screen clearly? If you can hear my voice clearly, can you type yes? Please, if you can hear my voice clearly, can you type yes? Okay. All right. If today is your first day of attending this class, can you indicate? Okay, good, very clear. All right, good, Randy. If today is your first day of first day, Prince, okay. First day, which person again that is today their first day? Prince Pat, are you in the group? Are you in our trading group? Prince, iPad, if you are in our trading group, say I am. Okay. If today is your first day, please. Okay, okay, Abaha Mary's first day, you're welcome. Abaha Prince, you're welcome. Who is there for the first? Bishop Sam, today is your first day? Bishop Sam, today is your first day? I can't hear you, Balogu. It may be that your network is bad. Check your Balogu. Check your network connection. Check your network connection, because I can see that almost everybody can hear me. So if you are not hearing me, it means that you have a very poor network. Bishop, today is your first day. Okay, first day. Bishop, are you in the group? Bishop, are you in our group, our trading group? Okay, Bishop. Okay. Bishop, are you from Kenya or Zimbabwe? Which of the countries? Or Ghana? I know that you have attended this training before. Bishop, which of the countries are you joining this class from? Is it Nigeria? I know you're not coming from Nigeria. Is it Kenya or Ghana? Because we have some Kenyan students in the house, we have Ghanaian students, and we have Nigerian students. But Bishop, it seems that you are, Bishop, you are not telling us where you are listening to or attending this class from. Okay, Bishop said, I'm from Nigeria. Okay. All right, great. Bishop, as soon as the class ends, you have to get in touch with me as soon as this class so you can be in the group. Immediately after the class, you can see me, WhatsApp me, and then find a way to be in the group, because you are not in the group. And it is only those who are in the group that are supposed to be in this class. So if you're not in the group at the moment, please find a way to WhatsApp me as soon as possible. All right, ladies and gentlemen, I want to welcome you once again to today's training. How many of us took the trade signal last night, the signal that was posted? How many of us took that trade signal? If you did, okay. Balogun said hi. If you in the night, I took it. Okay, Balogun, yes. Okay. Randy, good. I took it. Okay. I hope we are all in profit. because the trade signal give us a lot of money. Volatility index move very fast, so if you take signal, you make profit. And how many of us are in profit? Let me see those of us that are in profit in this trade. Those in profit, those in profit. Because almost everybody should be in profit. Frank, why did you lose the profit? Why did you lose the profit? You should be in profit because you entered very early last night. Frank said, I took the trade, but I lost the profit. How? I took the trade, made good profit, and lost it all. Why? You see, let me tell you the secret about this market. I already closed my position, made a lot of money. Oh, that is good, Balogu. That's what I want to hear. Made a lot of money. Good. Some of you who signed up yesterday, if you had taken that trade yesterday, you would have made your money, the money you used in signing up for this program. The key to making money in this index, volatility index, in case because of the low capital most of us are starting with, once a trade is called, enter the trade. Enter the trade, watch your market, don't go and sleep because you don't have to what's it called, face the pullback, because market usually does not go in a straight line. It zigzag up and down till it gets to the direction we are going to. So if you are trading and you are not watching your trade because you have a small account, if a market pulls back and you are not there, your money is gone. So my advice for you is to take a trade, watch your trade closely, and do not take too many positions. Don't overtrade. Most of us want to make $1 million one day. This is not like that. If you're making trade, you are trading and you are taking too many positions and you're not watching your trade closely, you will think that you're not, you lose, you say you lose your money because of your greed. It's greed effect. So if you want to be in this business, take your trades, make profits, bring it down to the very lowest time frame because you have a small amount. After you watch the 5 minutes time. Watch the 5 minutes time frame. See how the market is moving now with a smaller time frame. If you like safe, if you don't have good capital, even go back to the 1 hour, 1 minute time frame, which are MT5. That's the way the time frame is going, is moving. Is the market coming down in 2 minutes, in 3 minutes? If market is coming down within 2-3 minutes, as a small account, you should close it and wait for a new entry so that you can keep your money in your account. Because if you don't do that, you want to wait a pullback to happen before you quit. The money you have made, you lose it as well. So be smart in this business if you are using a small account. But if you are using a large account, you don't have a problem. I believe yesterday, most of us, the trade took us to even to our take profits. I took the trade. I just took the trade, played the trade. I slept off. This morning, I saw a lot of profit on my trades. A lot, when I say a lot of money on the trades. So if you're not making the money, then there is something wrong with your strategy. You have to. Right. So this morning we are going to be talking about trading psychology. Somebody said, how much do you consider as large account? At least from 1,000 and above is a good account. $500 is a good account. At least for a start, $500 you can withstand the immediate drawdowns, immediate drawdowns. 1 hour time frame is high. The entry should be lower than 1 hour time frame. Like if you're using a small account, you should be using 15 minutes to be entering your market. I am using 15 minutes to enter. I use the daily time frame to see the direction of the market, and then I use smaller time frame to enter my trade. That is how I've been trading and making profit consistently in the market. Somebody said most time Somebody said most times when trades are called, one can see it later and begin to ask if he can enter the trade, but the response are most times not provided, so it does not enter. That's why you have to be, I'm sorry about that, but you have to be close to your phone because you're doing business right now, especially your group. Because I cannot be, if I'm just constantly watching my smartphone chatting, that means I will not have any time for myself. You understand? So I'm also a human being. I have other things apart from trading. I have to attend to my wife. I have to attend to my kids. I have to attend to my family. So if I've not responded, it means that maybe I was not close to my phone. Otherwise, I would have responded to your question. So if that response didn't come, I would advise you to just look at the charts on your side. That's why you're a trader. You don't just have to learn the skills. So that's the most important thing I tell people in this group. If you don't master the skill, even if trade signal comes, you may not be able to utilize the opportunity because of skill. And you are late. What you need to do is just to look at the chart. Is it too late for me to enter? Is the market going upward or is the market going backward? Then you make a decision and you are there in the continue. You just enter with it an instant execution. So please, sorry about that. Just bear with me. I have other things I'm doing also. Watch the chart close because this is time to make money. This is December. December is here. So if you're making compounding your account $20 or $30 every day, it's how much that money is. Most people working for a month does not make such amount of money. So thank you. All right. For this morning, let us look at, well, this is an advanced class. So if you're a basic student, if you know nothing about advanced, this may be very, very complicated to you. We are going to be looking at the market and seeing how the market works and why I made that decision to take that trade last night. I want to tell you why I took that trade so that we can learn from that and begin to with that. Okay, so let's go ahead. Somebody said, can you enter a trade with instant execution without a stop loss? Yes, yes, yes. Good morning, madam. Without a stop loss, yes, you can, because most of the time you have a small account and maybe your account may not even carry the trade. So your account may not even be able to carry the stop loss. So the best thing is to enter instant execution and then you watch the trade. How is it going? If you collect $20, you close it. If you see any sign of retracement, look at my statement. If you see any sign of retracement after entering a trade, if you see any sign of retracement, then trade. Use, after placing this trade now, I'm going to use a smaller time frame because volatility index is very, very, if it is forest, I don't have a problem with that. You can take your trade, put your stop loss and go and sleep. All right, that is for forest, but volatility index, don't go and sleep if you don't have good capital in your account. What you have to do is to place a trade. Now come back to a very small time frame. Even if it's 1 minute time frame, we have it on MT5. Use a low time frame to now see the direction of the markets. So that if a lower time frame is showing you sign of retracement, in order not to lose your money you have made already, because if you go down, your stop loss may not, your account may not carry, just collect that profit and exit the market. That is how you can be scalping the market and make profit. Okay. Excuse me. All right, sorry, I have to adjust my position so that we can. So let me tell you the reason why I took that trade. That trade, please, can you hear me clearly? Is it clear? Is my voice clear? In the background, okay. In the background, okay. Okay, all right. Okay, all right, yes, all right. All right, yes, we can hear you now, okay. Okay, now why I took the trade is this is volatility index 75, all right. If you look at this trade, if you look at this now, this is a 30 minutes chart, a 30 minutes time frame. Randy said, you have showed us another strategy. When we enter trade with 30 minutes or 1 hour, we should use smaller time frame. Okay. Noted. Yes, that is it. Because of a small account that you may be trading, but the account you can be waiting for your stop loss, your take profit, but with small accounts, you just use smaller time frame to monitor the market for your exit. The market will usually um, do zigzag. So now I look at this market from daily time frame. Now the daily time frame telling me that this market is on an up, is going to be turning up because in the past the market have been turning. This is a zone. This is a zone. I look at the daily time frame in the night. Look at how big it is. This is what I was telling you about engulfing. This is what we call bullish engulfing. So anytime you see this kind of engulfing candlestick on a smaller time frame, if you see an engulfing candlestick like this, it means that the market uptrend. It means that the market is going to start going up. So look at how big this candlestick is. It is called bullish engulfing. Let me show you. Let me show you from the candlestick patterns. Let me show you from the candlestick pattern that I showed you the other day. Okay. Now, I told you once you know these candlestick patterns, you can apply it to your trading and it works. It works. Anybody who tell you that it doesn't work, it works. All right. Now, this is the bullish candlestick. And whenever you see this kind of candlestick on a zone, it means that you are supposed to place a buy after the close of this candlestick. Look at it. That's what happened here. Look at it exactly. It's called bullish engulf. It means that the buyers are. What I did after seeing this, I look at I now brought my time frame to 1 hour. I said I want an early entry. I said I want an early entry. Yes, the ones that does not have wick is even better. Any candlestick that does not have wick and is big entering. So I look at this candlestick as okay, now this candlestick on a daily time frame is here. Look at this place, this up. Then the market has already moved down to this place. The market retraced, but the daily candle, you understand? The daily time frame candlestick was still big, was still giant because people were buying during the day. During this day, but people were still buying. So the candlestick was big, but I said for me to have an early entry, I have to come to a smaller time frame. So as I got to the smaller time frame, I saw that the market had already moved down for a retracement, but in the daily time frame, you will not see this kind of movement. I said, okay, for me to have an early entry, I have to put. Now it was coming down. It was coming down, and there was a minor zone here. So I look at it. I drew my zone with this 1 hour time frame. I saw that this is a zone. I said, okay, now the market has come down to touch this zone. So I now put my buy stop after this candlestick. That was where I placed as because it has retraced. This is what you call pullback. Because I have seen that in the daily time frame, the market a very strong bullish engulfing. That means the market is about to explode to the upside. So I want to have an early entry. You can enter this market two ways. You can just come here and put a buy stop on top of this candlestick formation. On top of here, after this daily candlestick closing, you can put a buy stop on top here. You can still make a profit. But I said I want an early entry for better profit. So I look at the 1 hour time frame, and because I know the market was retracing, but in the daily time frame, you will not notice the retracement. Just move. Look at the 1 hour time frame, the market has returned to, and I put my buy stop. That time, this was just closed. I put my buy stop on top here. It was still going down, but I put my buy stop. I said, if it's going to go continue up, even if I'm not around, the market will trigger. So the market triggered and gave us that massive profit that we are up to now. Some of us are up to now, and the market is going up now. You can even draw a trend line. If you draw a trend line now, you can see that the market is respecting the trend line. You see, the market is respecting the trend line. Very simple. You don't need indicators and all those problems to know where the market is going to. You see that the market is respecting the trend line. Just draw this trend line and it will respect. Simple. Now, the market, the profit is going. Look at what it did. It went up, come down for a retest. You can, this one can also be your trigger bar. This is a clear entry point. You enter after this candlestick form. After the end of this candlestick, you place your buy, a buy stop, or instant execution. It gives you this profit. Very, very simple strategy. Now it has come to retest this place again. This trend line that started going back. This is also a good entry. But let's watch what is happening because this seems to be a minor zone. This is a minor. It could still come down to test here again. After these touches, if I see a good candlestick again, I will continue another entry. Like those of us who are late in this buy can continue buying this market. It may still come down and test. Then after it will move again to the upside. Now, if you want to follow this market without protect your profit, what you do now is simple. The first time we traded this market, the stop loss was down here. Stop loss was here. This is the stop loss, right? But now the market has moved to this upside. Now you can move your stop loss to here to protect your profit. Yeah, if you are using phone, it's difficult to draw trend line, but MT5 allows you to also draw. Yes, Randy. Yes, you understand. For volatility index, for you to draw these things correctly is when you're using a laptop. But if it is Forex, you can use Trading View very well. It's the same thing. But I've tried to see if I was seeing Trading View on volatility index. I could not. I was seeing volatility index on Trading View. I didn't see it. So for this, as the price has moved up here, you can put your stop loss, move your stop loss to this point. You can just type your numbers so that your trade is now risk free. Your trade is now risk free. That is how you move your stop loss. If market move beyond again, you put your stop loss down here. Your trade is free. You are now risk free. You are just following the trend as it is going. If the market move forward again, you put your stop loss up. Market move up again, your stop loss up. Now you are following the trend until you collect the money in the market. This you can trade this trending market. Very clear and simple. Look at a pullback. Let it be that yesterday we talked about strength of a trend. Your trend is there is health momentum in this trend. After now, we can buy this pullback. In my own opinion, to buy it now is still very risky. Let it go. Let it go. It will pull again like this. It will do something like this. So now still buying is too early to buy. The buy started from here. This is not a pullback. It's just only one candlestick cannot convince you that it's a pullback. A pullback must come like this. So jumping into a buy is still very risky. Let it go a bit. Then later it will come back and do this on this trend line. That time you can now say, okay, it is time for me to re-enter my trade. So this is how we follow the trend. But we have that. Okay, the same thing, Ahmed. If you have a small account, it does not stop you from putting it. As far as you are buying, your stop loss is usually down. So that is it. You are buying, your stop loss is down. But if you have a small account, the only difference is that you may not withstand the draw, the upper on movement of the market. Market does not go in a straight line. Like, look at it now. It went up here and somebody did not take profit. Imagine you don't have a big account and you have open positions. Look at it draw down. It has wiped their position and even closed the account because it's very, very fast. So once you have seen this movement, take your profit. Once you have seen a strong bull movement, people are buying. So you have to you have to sell when everybody is buying. You have to sell, meaning that you have to get out of the market when everybody is rushing. Get out of the market that time because then you wait for a pullback to come. This is for a trending market. Now we have used the smaller time frame to determine the trend of this particular pair. When you come to the one for the daily time frame, it is a clear bull movement. Clear bull movement. That is why we're able to draw trend line on a smaller time frame because we know that the market is bullish. The market is bullish. Because if you are watching a daily time frame too, this movement can go like this. People that are using daily time frame, they will still be buying until the market will start turning. Then it will go again. It's going to turn to this place. Maybe by December, it will turn to this place. So the key is to know when to be buying, recognizing the pulling stages. You can even draw here 1 hour so that you'll be able to identify this turning point, the small turning points, and make profit consistently. All right. So trading, the trend line, how to trade the trend. Now let's talk about trade psychology. The one thing about trading, one is the mindset, and the other one is the is the skill. Like 80% of your trading is mindset, 20% is skill. 80% of the trading is your mindset, your strategy, your skill set is 20%. So how you react to the market is very, very important. Those of us who are trading the currency pairs, let me tell you one thing. You don't need to trade all the currency pairs. You need to determine just few currencies. Become a market specialist or you become a trade specialist. If you're a market specialist, it means that you are going to be trading just few markets, just few markets. As in, if it is one, you trade one. But I see a lot of traders making mistakes of trading all the markets, trading all the markets. You can't make profit in trading all the markets. You have to just trade few. One or two is okay. Then strategy is number two. You don't need to trade with every strategy. You don't need to learn everything in forex. No, forex traders don't have to do. Professional traders learn only one strategy. One. Like we now, what I'm teaching you is naked trading strategy. You look at their chart with your eyes. So you trade only one strategy, only one. It's not about number of things you know in forex. You don't have to know everything. Yes, Frank, it's the same thing with bearish, of course. You don't have to know everything in forex. Just choose one thing. This strategy I have been using has been giving me profit consistently without indicator. Look at my chart now. You are not seeing any indicator. No indicator. Most time when I post my trade, people think maybe it was a Photoshop, but this is the reality. No indicator, no nothing, no robot. Just look at price, see the movements, take action. Very simple. Use your trend line very well. Then market respects these support and resistance zones. Support and resistance zones are your friend. As a naked trader, what you do is to be identifying these strong, these support and resistance zones that are the major problem that you have. Once you are comfortable, you apply a good entry and that is, I mean, you'll be very comfortable trading this market. Learn how to draw these zones comfortably. Any trader who is not, in fact, 50% of your trade skills is when you have successfully drawn this support and resistance zone. So we are trading based on zones. We are not trading based on, we cannot place a trade except it is on a zone. Your trade must be on a zone. So let's look at currency pairs and see where we can draw some zones. This is GBP USD. I'm on this trade. I am going to take my profit here. Here. Because this place seems to be a zone, a minor zone though, but it's a zone. I'm going to take my profit here. I'm still on this trade. Yeah. Please, guys, you are as forex traders, you need to learn how to review. Maybe I will just show you some tools again before we end this class. But trading view is your friend. Trading view is your friend. So these are the zones. You can see the market turn from these zones. See, these are turning points. What you need to do is just to use a higher time frame. Identify these turning points. It works with every instrument. Stock, forex, crypto. Only Bitcoin that does not respect those zones. But Bitcoin is being controlled most of the time by emotions, market sentiment. Most of the time, but first, even fundamental controls it, technical control it. So look at this turning zone. a very strong according to the daily time frame, but it is coming for a retest. It gets to even this for, but I can my profit here first. But it will come to this down here for a pullback before going up again. Because why did I say so? Look at this giant candlestick from the daily time frame. Very big candlestick formation. Giant. So these zones are very critical. You need to understand the importance of this zone. So we are going to look at few currencies and analyze them. If you have any currency you want us to analyze, you just bring, because this particular session is about trading, analyzing charts. Let us analyze the market so that we can know what to do for today, how we can trade today currently. Guys, one very important aspect of trading, if you want to be in this market, learn to minimize your risk. I see some posts on the group, and sometimes I wonder how much account we are trading. If you are trading too much large positions, you blow your account quick. You can make quick money, but the day to go against you, all the profit you've made is gone. The key to your success in this business is slow and steady. End the race, but they are using opening too many positions, 0.03, 0.01. Your account cannot carry that money, you will blow your account. So for you to last in this business is slow and steady. Consistently minimize your risk. Maybe this morning we are going to talk about risk. I'll be following up on it. Okay. Euro USD. Okay, AUD. Somebody say AUD card. Okay. Okay, NZD CHF. Okay, let's look at NZD CHF first. NZD CHF. NZD CHF. Okay. All right. What you need to do is to come to a daily time frame and look at the direction of the market. Let's draw these support and resistance zones on this market. Let me remove these ones first, because the key to your success in this business is identifying these strong zones. Okay. If you want to draw this, have these tools here, what you need to do is like now for support and resistance, you click here, this trend line, look at this horizontal line. If you click this one, it will be added to your favorite. So what you do is just to click it like this. These are strong zones based on the daily time frame. Let me even use the weekly. Okay, this is the weekly time frame. When you are drawing your support and resistance zone, use higher time frame to draw them, and then you can now come back to a lower time frame to see how, if they are right. Markets, look at the touch. You can do this comfortably. You have done very well in trading. You can do this comfortably. You make consistent profit in this market. These are the turning point. You can see touches. What are the resistance lines? Can just go back to for history. Once you've drawn these things, you go back to history. Look at touch number 3. It can even be 10 years ago, but as far as it is a touch, the touch. Okay, we've seen a clue about this market. It a touch. These are the touches that we have. Lock it. Trading view is very flexible. Agile is today a phase of coming. I'm seeing your hands up constantly. If maybe you check yourself well. Agile is today your first day of coming. Okay, Peter wrong. This is advanced for you, Peter. Peter, this is advanced. What we are doing is drawing support and resistance zone. Mr. Peter, this is a little bit advanced. Tomorrow is class for basic students. I want to encourage you to be in that class so that you understand these things very well. Mr. Joel, is today your first day of coming, please? All right, now these are the zones. These are places where price back. What are resistance zones? Are zones where price has touched and bounce back. And price normally respect these zones. A support can be broken and a resistance can also be broken. Support, also known as floor. So when price touches a zone like this, as a naked trader, you make your trade decisions whenever price approaching a zone. Look at 1/6 resistance. Number one secret is draw with a higher time frame. Draw with a higher time frame. I think that this is look at this at this zone. So what you should be doing as a naked trader is to allow you can make a decision on this. Okay, now this is a clear movement. This is a clear. By now, this candle, that person entered. If the person had after this market is still a buy. Let's even go down to the 4-hour candlestick, the 2 hours. Look at what happened. Let's say you were using 2 hours to look at the market. You see, you place your buy after this one here. Here would have been your entry. You should put a buy stop. Right? Look at how these zones are respected. This was a touch, but down, price broke through this zone and then came back for a retest. This is what we call when if a resistance is broken, it becomes a support. See that the price broke through here, went up, You don't need to enter once it is broken. Most people made the mistake of after the breakthrough, they will just enter, jump in. No, allow the market to go. After the retest, look at this smooth movement. Let me even count the pips. We count pips from here. You see, almost 30 pips movement. So in my own opinion, this is still a buy. If you draw your trend line from here, look at the clear buy. Look at how the trend line is being respected. Clean. Look at touch here. Look at touch here. Very, very. Once you understand these trend lines and these support and resistance zones, nothing will stop you from becoming a successful trader. You see? You see? This is a clean. After this candlestick, you can still place a buy. Who is trading this market? So this is a buy. Allow this candlestick to finish. Look at the news. Look what. After this candlestick finish, you can place a buy stop. This is also a buy. It's also, if you want to be conservative, you can allow it to come back and touch this trend line. Now you can draw this trend line with your phone as well. If you want to be conservative, you can draw this trend line. I mean, you can allow it to come back and touch this trend line again before you enter. But this is a buy. Trust me, this market is a buy. But AUDC AD. This is AUDCAD. So what you want to do is to go to the higher time frame. You identify these key turning points first. Please, is my voice still clear? Is my voice still clear, please? Right. Okay, thank you. All right. So once you have identified these key points, you just come here and you click. Let's use 1 week to draw this trend line. Spot and resistance zone. Okay, let's remove it. Now, if you want to also know better how these zones are being respected, you can use a line chart. This is a candlestick chart. You can use a line chart to draw this. Line help to see how these things operate, how these zones are respected. So now let's use the weekly to find these zones. The market, according to the weekly time frame, is a downtrend that has come to a downtrend that is doing maybe look at it now. Once a clear downtrend, but this massive candlestick seems to be telling you that the market is going to be moving the upside. Okay, Now you identify your zone. You come to the daily time frame. You check these zones. You can even use two lines to identify these zones. One is start with the week. All right. This is what you will be doing. All right. You lock it. Just be watching how I am using this trading view so that you can be using it as well. Once you click on anything that you want to use, all these things will come. You can change the color. You can lock it now. I'm going to lock it. Now I have locked it. Now this market is locked between these two zones according to the daily time frame. This is a ranging market. We call it ranging. This market is ranging right now. So you can't. Balogu said, what about the current price level where the green light is? I think it is a zone. Okay, let's find out, Balogu. Let's let's these zones. Once you identify these zones, you have gone very okay. Balogu, you are right. This is a touch. This is that's been bouncing back from here. Clear touch. This is a touch. This is a touch. This is a touch. This is a touch. So you can literally go back to find out if those places are actually zones. But this is a touch. Look at it, it's a touch. And this is a zone. Yeah, it broke through here. Look what happened. Market broke through this zone. Then came back here for a retest before going upward. So these are zones. Now, this market is not trending. It is not. It's just doing what is called ranging. The market is on a ranging mode now. The best thing you can do is now to be looking at buying opportunity from here. If you see something like this, you're going to place a buy. But let's go down. Once you have your market is down to a zone, you don't want to be looking at daily time frames. Now you can bring it to a smaller one for you to have an early entry. Right? Uh, time frame will even show you. Let's lock it. You have to take notice of all these things. You can color your smaller time frame with a different candlestick. Daily we'll color it with, let's color the smaller time frame with blue. Now, when you see a zone like this, market approaching a zone, look at the candlestick formation. You can see that here it was massive. It went up here. It was also every time frame, every chart on TradingView as somebody said voice not clear. Please, is the voice clear now? If you are approaching a zone, look at the time, the movement, the candlestick patterns. Look at the candlestick patterns. Are they big or small? Okay, thank you. Voice is okay. If you see that the candlesticks are becoming shorter, shorter, and they are approaching, the market is approaching a zone, you should know that the sellers are getting weak. So you have to be looking out for a reversal candlestick formation. So as market is approaching these zones, you bring down your lower time frame to check, even check the movement of the candlestick. Are they big or they are small? But if you look at this one, it shows that the market is getting tight. Look at plenty wicks. All these are called a sign of weakness of the sellers. Sellers are getting weak. So allow it to come down here a little. It may not be this green, this red line called, it's a zone. It's a zone. So you can draw it as a zone, not as a straight line. This is a clear, this is a clear zone. All right, so let's expect the market to come down here. For somebody who is trading AUD and CAD, that is Australia dollar and the Canadian dollar. This is what you are seeing. It's a clear zone. Identify this zone and expect to buy from the down because the market is actually ranging. So you buy from the down. Buy from the down and take your profit from the up. That is ranging, trading the range. The market range like this most of the time. So you take advantage of the range and be buying from the down. Expect to buy from the down, but allow it to give you maybe bullish engulfing like this, something like this to print. It could be 1 hour time frame. It could be 2 hour time frame. If something like this prints on that zone, you can be sure of going for a buy and take your profit. Yeah, take your profit there, or you can allow the market to do this. You can allow it to come here like this, go up a little bit, then come back for a retest. Then, boom. This is another way of expecting this market. So for now, just don't buy. If you are selling, you can still be closing yourself. For now, if I were you, I'll be closing myself because the sellers are getting weak already. Take your profit and wait for a possible. It could do this. It could break. It could break through this zone like this. All right. You come for a retest, then a buy, a sell, continue. So this is a zone. So watch out for a buy from the top or break through the zone according to the 1 hour time frame. So look, I don't know the time frame you're using, but you can bring down your time frame to have an early end. All right, so let's look at which one again. Somebody said Euro USD. card, Asia. We have seen a unicard. Let's see gold USD. SE USD. So look at all of them. Okay, go. Let's look at a higher time frame. Gold is according to the daily time frame. We are seeing an uptrend that is doing correction. An uptrend that is doing correction. So here we cannot buy, we cannot sell. Let's sell from here. Let's come down. According to the data frame, if you come down here, if you want to now day traders, and we have what they call swing traders, and we have scalpers. Day traders, they trade and they get in and out of trade within that trading day. So they look at candlestick like 1 hour, 2 hours, and sometimes 4 hours or 30 minutes. Day traders, but swing traders are those people that usually hold trade for days. I am more of a swing swing trader rather. And let me tell you the secret about trading. If you're a new trader and you want to make money from the market easily, always look at the higher time frame. Be more of a swing trader than a scalper. Scalper, you have to be looking at your phone almost all the time. So, but for volatility, that you are going to be a scalper except you have good capital. You want to make money for volatility, you must be a scalper. But currency pairs, look more of higher time frames and enter with a smaller time frame. Now with a time frame like this, as a day trader, you come back, you look at their chart. If the market touches this zone and give you a bullish formation, you know that it's a buy towards the upside. So whenever the market is approaching that zone, for an early entry, let's look at, because it seems to be coming down, look at 4 hours. 4 hours is very, very accurate too. Okay? According to the 4 hours time frame, this market seems to be this market may come down here before turning. Maybe this place. This market may come down here before turning. But it's still very risky. According to this candlestick now, this is a very giant candlestick, 4 hour, very giant, and this is just a pullback. It may be going up right now. So this place, to me, just watch out for this candlestick to finish forming. if after this finish forming and you see another 4 hours going upward, I think you should take the up movement to get it here. It means that the market is going to get, yeah, it's going to be going this way. Look at this giant candlestick, giant one. Look at this very giant, and look at the sell. The sells are not strong, but look at this 4 hours. Whenever you're trading, look at your left, how big this candlestick is. How many piece movement? Look at how many people, almost, look at 1,000. This gold is, look at 1,033. Look at how big this movement is. So this shows that the buyers are strong. The buyers are strong. Because yes, buyers are strong. So let's be taking it to the upside, because market went up, it came down to this zone, and it's into this zone again. I don't think it's a pullback for a sell. No, I don't think so, because it's ranging between these two zones. So what I'm thinking about this market is to this upside because of this candlestick. So if you want to trade this market, it's better you look at for, watch this 4-hour candlestick. It gives you, let's look at 2 hours and see how it looks like on a 2 hours. It's the same thing. Look at this giant movement, very giant. It's now pulling back, and the pulls are small. Look at it, they are not big. If the market prints something like this, green. You can place a buy. All right, now you can place a buy with this thing. If watching it 2 hours after this candle signal form that you have, let the New York market open. This is a London session going on. Let the New York market open. So if the New York sessions come up and you see something like this, then you have a very good buy opportunity and take your profit here. Okay. Let's look. This Euro USD2 is getting weaker. The buys are struggling, the sells are struggling. I'm on this trade, but I'm getting tired of this trade. It seems I'm going to exit this trade. This Euro USD is on this zone. I think the best thing is to stay out of this market now. This is a clear zone. Let's bring it down to the daily 4-hour now. This Euro USD, I think I'm going to close this trade now. Even as I'm talking with you, I'm going to close this trade. This is no longer a sell. The market has, the sales has died off. They are dead. The bears are dead. So I think it's time to close this market. So Euro USD, let's look at for even an up movement, because this market, when it touched this zone, it went up, it has touched this zone again, it's struggling. It has not broke through this zone. So this seems to be a retest for next movement to this place, because it's ranging. It's not actually it's ranging. It's ranging. Let's see GBP USD. Please, can you hear my voice clearly? Please. Okay, okay. So Euro USD is Euro USD is ranging. We have to stay out of the market, but market is not making any decision. This time it's when you lose your money. USD. Look at GBV USD. I'm on this trade. I'm in good profit this trade. I think leave this trade now because this zone, this is a minor zone. Market could just turn from here. See touches. Market could just turn from here. Look at this touches. This was November. It got here and it went up. It came here in November again, 22nd. It went up. Now it's approaching this zone. So the best way is to quit this market. Let me close my trade on this too. Now I'll be looking out for a breakout or a continued movement of the market towards the up direction because it is a zone. See how easy you trade this market. No complicated, no robots, no rocket science things, no physics, no chemistry behind it. Just very simple price action trading. You look at the price and you make your decision based on what you're seeing. There's nothing like rocket science thing that most people use in their trading. Trading is not to know everything. Just use simple strategies, making money consistently, manage your risk well. Right. Any other currency pair that we have to look at? Let's see. Okay. I think we have come to the end of today's class. Let's look at volatility index, our friend, our money making machine, and also okay, volatility index still ranging between these two zones. Still ranging between these two zones. Okay, trading view. Okay, let's see. Let me show you how few things about trading view. Now, to understand trading view is very simple. Look at when you open the trading view, this is the first thing you will see on the right, on the left side of trading view. Blessed Okonko, hi. A little highlight on buy stop buy limit. Okay, okay. Please, Blessed. Tomorrow is the basic class. Tomorrow we are going to be talking about buy stop and buy limit. Please, find a way to attend that class. That is basic, forex basic, buy limit, buy stop. We'll attend that class tomorrow, please. 6 p.m. tomorrow. Okay. This is how you see what you see on the chart. Once you register with open an account with tradingview.com. You can log in with your Facebook or Google details. Then you are going to see this thing. The first thing you will see is your these things. This is arrow, this is cross, this is dot. This one will enable you to this line you're seeing, this cross long line. Once you click here, you see this yellow icon. This yellow, if you click it, you add it to your favorite. Look at it here. Look at it down here now. If I click it, it's no longer there. Now, if I want to add it to my favorite, once I click it, it will be there. Right? It's there now. That is number one tools you can use. Then number two, these are the most important thing you can use. This trend line. If I click here, I'm going to remove it. I've already added it, so it's on my tools. These tools you can carry them along anywhere. Play with them to anywhere you want to go to. All right. So if you click, you see trend line, you see triangle, trend angle, but most time I don't use them. The most important line here is horizontal line and trend line. There are so many things here, but you don't want to use them. Most important thing is horizontal line and trend line. You come here, this one too. If you're a trainer like me, you can use this thing. This one is to draw, brush. It's to draw. This one too is to draw. If you want to use it, just click it like this. See how you can draw. As you are drawing, once you click, you can change the color anyhow you want to change it, or you can click delete, or you can lock it with this key. Then, if you come to this next one, this most important thing here is the text. You want to write any text? As a trainer, you can write a text. You can start writing the text. Right? Write something. Write anything. See? You can write something here. You can delete it. This is text. You can come here. This is another tool that you can find here. This place too, they don't have much things here. Just ignore these ones. I don't see any use here. But some traders use complicated things. Here you're going to find the most important tool to use here is this price range, date and price range. Date and price range help you to measure your PIP. Once you click this, the market here, if you want to measure this PIP, you can say, okay, let me click it here and put it to this up. Movement. Once you click on this, it's on my favorite list. Once I click it, I just put it anywhere I want to drag it to. But if it is on your phone, you just click your phone, a touch on your phone. Then if it is a laptop, you left click, and then drag it all. See, this is how you can measure your PIP. Instead of calculating your brain to calculate PIP, this is what you do. So, anybody with any question, I am going to mute you so you can ask your question, please. If you have any question, you can indicate because we have come to the end of this class. So you can ask your question. Anybody who want to talk? Anybody want to ask question? Can indicate interest. So the time up is not showing. Do you mean the time frame, please? Prince, do you mean the time frame? The time frames are here. Okay, Balogun quite well understood. Okay. Look at the time frames here now. The time frames, once you click here, let me remove from favorite. From favorite. Anyone you remove, anyway, remove them, remove them, remove them. Now you have, let me also remove 30 minutes weekly. Now you have only 45 minutes and daily. For you to see them, just come here and add them to your favorite. Look at 1 hour. Add it, 2 hours. Add it, 4 hours. Add it. Now they are on the. I don't like 45 minutes. I don't like for the. Okay, not even there. So look at your favorite time frames. Yes, you are the one to add them. Somebody said no question for now. Okay. Like, what is your question? What is your question like? You can. Let me unmute you so you can speak up. All right, Mr. Light, you can speak up. Mr. Life, you can speak. Mr. Life, your microphone is not working. I'm going to mute you again. So which person wants to speak again, please? Mr. Life, your microphone is not working. I tried to unmute you, but it's not working. So maybe you can ask your question by writing. You can ask by writing, please. Okay, Shoma said, how do we drop the symbols on Trading View? Shoma, what do you, I click the cross now, but it's not leaving. Okay, once you click the cross now, you can right click it. Once you click it, look at, you don't right click it, it's gone. If you click something like this, what are the distance? Once you see the line moving, anywhere you put it, it will drop from there. If you want to delete it, just click it again. This round thing will pop up. Then you click delete. Prince, how do we credit our MT5? Can I move cash from my broker account to binary? Found it. No, you can't. If you want to deposit, watch that how to withdraw from binary account that I sent to everybody on the group. Maybe I'll send it again after now. Watch that video. You can use your debit card to deposit money. You accept from your card, your local card, based on the account information to look at for doing buy and sell. Oh, sorry, it's the same. Yes, same thing with any market. Okay, to calculate PIP, Shama. To calculate PIP, this is what you click here. Once you click here, on guys, you can see in market. Someone said does support and resistance. You can see that the market has started turning back from here. These zones are like a frying pan. Whenever price moves to these zones, they will react. So if you want to be very aggressive, you can just put a sell limit a buy on zone, trading, but it pays sometimes, but risk. Even put a buy stop on the zone, so that whenever price touch here, you can collect 10 pips. If you're using a standard lot size, you collect 5 pips to something, it will give you $50 that day. Look at the price touch here, and now it has moved how many pips? 7 pips. It has moved to 10 pips, 8 pips now. Imagine you have put your buy stop here. This about price. So somebody said, ask if does volatility index obey trend lines, support and resistance, so one can analyze the market like forex as you just did. That's what I've been doing. That's what I've been doing. Look at it now. It obeys. It obeys. It obeys. That's what I've been doing. It obeys. It does, brother. Okay, so we have come to the end of tonight's training. So we are going to be looking at for next week, Monday, for advanced. For the basic truth students, tomorrow is our day. What is buy stop? What is buy limit? How do I place a trade? Tomorrow is our class. So join the class tomorrow by 6 p.m. Let us do it again. I wish you happy trading day. Look out for trading signals. Be close here. Be close here. Be close to your. Thank you. Thank you, Prince. Be close to your. As I said, some of us have not overcome greed. This market is consistency, is compounding. Yeah, there's need to teach money management. Of course, we are going to talk about risk management next week. Very, very important. So greed is what kills traders. So let us look out for signals. You close your phone. If you see an entry, enter. Thank you, Charisma. Shama said the line has not left. So I don't understand what you mean by. Look at this market now. You see, it's going up. These markets are always respecting these zones. Anybody who tells you that it does not respect support and resistance does not work is not a trader. See? Shama, just right click. Look at it now. Once you click this one, it will come. All right. If you want to remove it, just right click again. It's not going to be there. Or click something else. Click something else. Yes, Obaha, yes, you have to watch that basic video. That Forest 101, let it guide you till tomorrow. Forest 101, pending others and all that. Watch those videos, it will help you. Like seriously. So Shama, once you have this thing there, you can click another icon. Automatically that thing will go. It will give you another thing. Just play with it, practice with it. You understand? All right. Today's meeting has come to an end. Happy trading day.